Hey guys, so today we have an awesome episode for you with Kate and Garrett. They dive into real estate, the financing. Garrett's a great lender here in Utah and has some good insights on what you can do and strategies and tips and tricks for buying a house in today's market. Hope you enjoy.
Here with Garrett Hansen, who's with Academy Mortgage. He's a lender that we've used multiple times on quite a few of our transactions. He does an awesome job. Just going to turn it over to him a little bit to let him introduce himself, kind of why he does what he does, and a little bit about him personally, and go from there.
Okay, sure. Well, my name's Garrett Hansen. I've been in the lending business for a little over 7 years now, and I graduated out of Utah State University with finance and marketing as my majors, and jumped into this just right after. A big thing that kind of got me into lending, I didn't graduate high school thinking I wanted to be a loan officer or anything like that, but I actually did this internship. It's called the SEED program, and it's kind of a smaller one, but it was out of Utah State, the business school, and it was over in Ghana.
Oh, really? Wow.
And so they took me, there was 3 of us. I actually brought my wife too, and we were there for a whole semester. This was back in 2013, I think it was.
Okay.
And anyways, it was this venture to basically go out and provide funding to local business owners and entrepreneurs, which was
cool.
really cool.
That was pretty cool.
And so we, like I said, we were there for a little over 3 months, and we helped. I think we funded. I think it was 42 individuals, and we helped them, come up with some business plans. A lot of them already had businesses in place, and a lot of it was actually focused towards the women in the communities, which I thought was pretty cool.
The women, meaning like they were the ones that were starting most of the businesses?
Yeah,
Okay,
that we
cool.
were focused on helping the women get more funding.
Okay, cool.
The big reason, I can't remember the name of the book at this point, but the big reason why was there was the borrowing rates over there. A lot of them were dealing with loan sharks that were charging 100% interest daily,
Jeez.
right? And so they'd get their wares, and they'd sell them, barely scraping by, and always under that crushing pressure of the debtor.
Mm-hmm.
And so, anyways, they're called micro loans, and I think the biggest loan we gave out was like $300 US.
Oh, geez.
But all of them, we went through their business models, and we took them through to help them escape those creditors and be able to actually grow their business, not just survive.
How
So pretty cool.
How different? Just a quick question. How different was the business economy, the entrepreneurship out there in Ghana versus here?
There we were in 4 little villages, and so I can't really speak for the whole place, but
Okay.
out in the outskirts, that's what everybody had their own little business.
That's pretty cool.
So whether it was selling bread, selling fish, selling clothes, sewing clothes, creating something, it was that or farming. Farming was a big one too.
I actually just heard a stat the other day where it was 97% of Gen Z don't want to work 9 to 5. They don't want a W-2. 97% of them want to be an entrepreneur somehow.
Okay.
Which is, I don't know how true that
Wow.
is. I have no idea.
I could see it.
Just came from
Yeah,
like,
why not?
like Instagram reels and stuff, but so I don't know how true that is. But like I can see, maybe not 97%, but I can see a huge shift in the economy here that, entrepreneurship is becoming there's so many ways to do it now.
Yeah.
There's so many ways to do it. You don't, and especially with AI coming out and all that stuff, like there's just so many options that you can do to make money on your own time.
Mm-hmm.
And
Definitely.
the W-2 is kind of not falling to the wayside, but is becoming less desirable, I think, than the way it used to be.
Okay.
Anyways,
No, I could see that.
keep on going.
There's definitely lots of opportunities everywhere, right?
for
It's
sure.
just if people want to take them and run with them.
Yeah.
But yeah, that kind of over there in Ghana doing those microloans, that opened me up to lending and how beneficial and important just having financing options is. And so, anyways, came back. I started with Academy right out of college, Academy Mortgage. And yeah, really, that's what a lender is it basically we connect people with financing, right? Okay. So if they want to buy a house, whether it be a primary residence, a second home, an investment property, a manufactured home, a barn dominium, whatever.
Those barn doors are sweet.
There's lots of different ways to structure, and there's lots of different options to accomplish those goals. And that's where I'm going to say there's probably hundreds, if not thousands, of different products across the country to choose from. And so that's where having a good loan officer on your team to guide you and make sure that you don't overlook any of the good opportunities available to you.
Yeah. So tell us a little bit about what makes you different, what sets you apart from different loan officers, and kind of what you feel is some of your strengths. And
yeah, I'd say the big thing is I pride myself on, just as a loan officer, of just the full, complete financial picture of my clients. I'm going over that with them because, it's easy to say, okay, here's what you qualify for, here's the interest rate you're qualifying for. But I think it's important to really see, okay, what's your true goals? Mm-hmm. What's most important to you? Is it the payment? Is it the down payment? Is it just the interest rate? You want to get the lowest interest rate? Is it timing? How quick you want to close? There's a lot of different options for there that are important to every transaction. And so really the biggest thing that I pride myself on is just finding the best structure. Because there's a lot of creative ways to do a loan and make sure that my client's in the best financing position. So that's one thing. I've actually done quite a bit of, I'd say, higher education when it comes to mortgage lending too. Okay. So I did the School of Mortgage Banking through the Mortgage Bankers Association and got my accredited mortgage designation. Oh, cool. Accredited mortgage professional. So that was a big one. So anyways, it's kind of just how the whole industry works. And so really just being able to answer, really educating myself to be able to better answer and better address the goals of all my clients, because everyone's goals are a little different.
Absolutely. From a personal note, we actually used Garrett to buy our property, and he was very much on the phone with us, breaking down everything, breaking down all of our options, our timelines, letting us know, there's more than one way to accomplish the goal. I think that's big. I think a lot of clients kind of have this view that there's only one loan type that they can do. There's one X amount percentage of a down payment they have to have. Yep. And that's just not the case. There's lots of different ways to get you into a property. The biggest thing is just getting in and speaking with a lender who can help guide you in the right direction and get you going. And whether it's getting you financially ready 6 months down the road, mm-hmm. or whether it's, you're ready now, we just have to do some creative stuff to get you in there. And that's something that Garrett does a really good job with, is sitting you down, taking a step back, and really kind of walking you through a lot of the different options that you do have. Yeah.
I mean, that's important because sometimes what I think's best for you might not be best for you. So it's really just to see what your goals are, and we'll, get you to them.
Speaking of loan products, what are some of the ones you have that you like, that are new, that you may be using, maybe ones that you've used for years and years now? What some of the most common ones? What some of your favorite ones for, let's say, for both first-time home buyers as well as for like investors, or as for just your casual buyer who sold a property?
Okay. So some good ones. The most popular is just the standard conventional or FHA 30-year fixed, right? Probably the most popular one. Then you got the VA 30-year fixed. And then you got USDA, which honestly, USDA, I love USDA loans. I grew up in Cache Valley. Yeah. And so it's all rural up there. Or it was a lot more 20 years ago.
It's growing a lot.
But anyways, that's a great zero down loan for any rural area. And so that's a great one to not overlook. But as far as unique ones that we have access to and that are great loans, we have a really good investment property loan, 1 to 4 unit. and has no mortgage insurance. It's only 10% down.
That's
And so usually the biggest hurdle is the down payment when buying an investment property.
for sure.
And so it brings that within reach. We also have some great first-time homebuyer programs. We have one in-house one, and we have probably 4 or 5 that are through different parties as well that we have access to. So there's a lot of different options on that. Is there anyone that's particular that you...
Well, so the biggest thing right now, obviously, is the interest rates as far as first-time home buyers go.
Yeah. Yes, it is.
The housing market is priced up. Everything's costing a little more. It's coming back down. Luckily, I think that's a good thing. Prices are coming down, which is nice, but your interest rates are still a little high. Today, so actually, I read that they had dropped almost a full %. I had seen that they were down to almost 6. I don't know if that's 100% true. I haven't seen anybody pull numbers on anybody yet today, but I've seen that they had dropped almost a full %, and a lot of that has to do with Silicon Valley Bank and stuff, and we'll talk about that later. But
okay.
But specifically, I guess more is trying to find a solution for the first-time home buyers who have some money stockpiled up, but they don't. The interest rates is the tough spot, and maybe that might be something like the 2-to-1 buy down if they can qualify for that original.
2-1 buy downs. Yeah, 2-1 buy downs are a great product. Basically, the way they work is, let's say you're starting at a 6% interest rate. That's what the rates are today. A 2-1 buy down would have your first year, you'd actually be at 4%. Second year would be at 5%. And then your third and every remaining year after that on the loan would be back at the 6. So it gives you that two-year really big cushion on your payment.
Mm-hmm.
The beautiful thing is it can be negotiated. The seller would have to pay for it.
Okay.
It can't be from the buyer, but often just on a typical loan amount, it can save someone your first year probably $500 to $700 a month,
Which is huge.
which is a big deal.
Mm-hmm.
And then the second year, just cut that in half, you'd probably be somewhere 2 to 4. And so, anyways, it's a big deal.
Yeah, absolutely. And with those, you
one.
can refinance any time in that time frame, correct or no?
Yes, you can.
Okay.
And the beautiful thing is if you refinance and let's say you refinance a year down the road and you still are in that 2-1 buy down, there's that difference in benefit that you would have received can actually go towards your closing costs
Oh, cool.
on the refi. So it's not like it's sunk cost at that point.
Yeah.
It's still your
still
funds
your
that
money.
you could use on a refinance.
That would be awesome. Yeah. So that would be one option, maybe.
Yeah, it's a good one.
I don't know if I don't really have anybody specifically in my mind that I'm searching for an answer for, I guess. But I guess that's just some of the biggest problems. But the roadblocks we run into as an agent is right now is the interest rates and then just the high price of the homes.
Yeah.
And
I think, obviously affordability is the big thing, right?
Mm-hmm.
So you look at Utah, and we're probably in one of the most, if not the most unaffordable state right now
I believe it.
than we have been in. Since we've been keeping track, probably.
Yeah.
Which is crazy, but that's where the 2-1 buy downs, getting creative with some options, and because there's another thing is like mortgage insurance. If there's a different, unique way to structure that, there's one way we could look at maybe lowering your payment, because ultimately buying a house is a lot more today than it was a year ago.
Absolutely.
And so every little bit counts, and that's where it does pay to have a good one on your team.
Absolutely.
Good team around you on the lending side, realtor side.
Absolutely.
Everything.
Real quick, give us a simple rundown version of what it would be like for a client or a potential buyer to come in and say, hey, I want to buy a house. Let's start that process.
I'd say, well, congrats. That's awesome. Good. So as far as the process goes, first thing is getting their full financial picture in front of me. And so that's done with a loan application, pull their credit into it, check their income and assets, and just see their full picture and validate it. And once we have that, we can start sifting down through the many different options down to the best one. Mm-hmm. Eliminate them down from the big stack, the many options down to the best ones. And with those, basically check the boxes, make sure they qualify and get them pre-approved. And so we have this new program called our Pre-Approval Plus. And I'm super excited about it because a big thing I've been shooting for the past year is to get to a 10-day close.
That would be awesome.
10-day clear to close, which is doable if you got the right team. And I think I got the right team. And so anyways, we just hit that. It was back end of last year. Was like the first quarter that I had it. I'm like, yes. But on this Pre-Approval Plus, basically, we do a little bit more footwork up front just to basically pre-underwrite the whole file, pending the title work and the appraisal value on the property, and then send them out with that pre-approval, which is a lot stronger and puts them in a lot better negotiating seat. And you as an agent puts all the agents in a lot better negotiating seat to win the deal for their client.
Absolutely.
So anyways, once I get them pre-approved, I send them over to you, to the agent, and get them their pre-approval, and they're out home shopping. Now, once they find the house, then we come back into the picture, and we order the appraisal, and we get, basically, I do a full sit down on best loan structure at that point again.
Okay.
Because then we're looking at locking it in. Where's the market at today? Where are rates at? Things have changed at that point, most likely. And which one's going to be your best situation still? Do we have to pivot? Is there something better thing that came into play? And once we have the best solution, we lock it in. We secure the interest rate usually, and get that thing going if it makes sense and they want to lock it in. And usually in this environment, every day has been a good day to lock in a rate just because it's so volatile.
Absolutely.
But once they're secured there, we do all of our stuff on our end. So we'll process the file, we'll validate with all the third party that we need to on the file just to validate all the figures in there. Send it off to the underwriter. It'll get checked by the underwriter. And once the underwriter approves it, says everything looks good, then you have the clear to close. And that's the
golden word
that's
right
the
there.
golden word. That's what every home buyer likes to hear.
Yeah. So just real quick on the agent side of the Pre-Approval Plus, I think that is an awesome program that you guys have done. I think especially with the home buyer coming in and making an offer on a property and knowing like with confidence, like 99%, like I can buy this home. Yeah. It will go through just fine. You know what I mean? I think it's kind of always not scary, but it's always with certain
it can be
situations.
A lot of people are a little nervous about it.
Earnest money on the line, and you've got inspections coming in, appraisals coming in, and you've got things like that where when the loan goes through underwriting, you might not come out all right. And so then you might not be able to purchase the property. And so with this new program, it's pretty awesome. You don't have to worry about that as much. Like, it's done basically. Yeah,
it just takes another piece of the equation off the table to worry about.
Which is super nice.
You still, like you're saying, you still have the appraisal that could mess things up or change things, and the title work. There's still a lot of different factors.
For sure.
So it does ease concerns.
But as far as the money goes,
gives that assurance.
Yeah.
What were you saying about as far as the money goes?
Well, as far as money goes, like it's, I can buy this property if, these things go through.
Exactly.
So, which is nice. What do you wish more people understood about the home loan process?
I feel like it's not as difficult or as tricky as a lot of people think it is, which is good.
Yes, it is.
Glad it's not the other way around. And so I would say, just no need to worry until we've been through everything and seen all your options. So I think a lot of people stress about it. And I think the best thing we can do is just sit down and go through it, rip the Band-Aid.
Absolutely.
Really. So a lot of times buyers are wanting to, just kind of get a taste of what it looks like, on them qualifying. But I pull my credit report, I'm kind of nervous. And I always say, hey, I'm not going to really be able to give you a 100% answer if we don't just dive right in.
For sure.
And rip that Band-Aid off.
For sure.
And otherwise, we might just be you're probably just wasting your time when we could just get to it, you know? The other thing I'd say is how important the credit scores are.
Yeah, those make a big difference.
So if you're planning to buy a house, try and pay your bills on time.
Even I can't go buy a brand vehicle or anything?
If you're not gonna pay your bills, then no. Just having a higher credit score opens up so many more doors,
Yeah, for
so many
sure.
more options, and the lower that is, the more they shrink. So that's a big thing to consider.
Yeah, absolutely. What are a few things the buyers can do to prepare before they talk with you?
I would just say come talk with me. Don't worry about it.
Cool. No, that's good though. I think a lot of buyers put too much emphasis on it. They worry too much about it. They worry they're not even
Yes.
close, or they don't know where to begin. I think most of the time, and I don't know about you, but most of the time I feel like buyers are coming to us as the agent. Hey, I want to buy a house. Okay, cool. Like, where are you at? Where are you at in your process? Oh,
Yeah.
well, I'm just looking, just started. Okay, and then the first thing we always tell them is speak with a lender always first, because we got to figure out money and where you're at before we can start really diving in too much. But
It's a big part, right?
yeah, and it's a good thing that it's nice to know from your end, like, you don't have to do any real big pre-planning to come in. Just
No.
walk through those doors.
I'd say the only big planning might be if you're self-employed and you're filing your taxes and you're worried that you might want to strategize on how you file your taxes.
Yeah, absolutely.
That's like the only thing. Other than that, I'd say let's just dive into it. No need to worry about anything.
Yeah, that's
And
awesome.
We'll get it figured.
That's awesome.
No stress.
What are a few resources? I know you had talked about your app that you guys use, but what are a few other resources that might be helpful for buyers, for our viewers? Any books, websites, podcasts, apps you guys have, or you guys that you know of that you think are good?
Yeah, I mean, we have our Academy My Mortgage app. It's an awesome app. It has a really good calculator on there, a mortgage calculator that captures the full payment. Principal, interest, taxes, insurance, mortgage insurance, even, which most calculators I see don't have all of that in it, and so it sometimes leaves buyers blindsided.
Yeah, I agree.
When they meet up with me. Oh, I thought it was gonna be a lot less.
Yeah.
Oh, I don't think you had the escrows in, but anyways. So it's a great tool, and actually you can apply from there just on your phone with apply on the mortgage application.
Okay.
And then the whole application, the whole loan process can actually kind of be done through there securely. So it's secure for uploading documents and stuff like that. If you Google me, Garrett Hansen, you can go to my website, and it ultimately has some great articles on there. There's a ton of them. Depending on, if you're a first-time home buyer, repeat, an investor, there's tons of different articles you could look at on there. One thing that I will say is the media. So when it comes to interest rates and things like that, just the market, there's so many different opinions, right? All across the board. And so to say, take everything you read online with a grain of salt, right?
Yeah, absolutely.
Because no one really has 100% confidence of what's going to happen in the year ahead. Could we hit on the bank?
Let's do it.
SVB.
Jump into it.
So this was one thing that kind of shook up the mortgage space a little bit because of this bank and these bank runs that we've been having. So if you're not familiar with the SVB bank, I'm not going to say everything. So there's plenty of articles you can look up about it. But I think the biggest thing, because rates came down, and a big reason that I see why they came down was because the Fed's been pounding this drum of raising rates, right?
Yep.
We're gonna, in a nice way to say it, we're gonna put the U.S. in a recession.
Pretty much, yes. Yep.
We got to get that inflation down, and this is the biggest tool we have to do that, right? And so when SVB went under, when it got shut down, it was huge.
Yeah,
a big bank.
It is. And
the Fed at first was like, we're not gonna intervene, right? And then they said, wait a minute. We need to do something about this. And I think they looked into it a little further and realized that for whatever reason they needed to help. There's a lot of different opinions on that, but they showed that they were going to potentially help these depositors, and they did.
Okay.
And so if you look at the 10-year Treasury, that dropped down quite a bit, and mortgage rates are usually pegged really close to that. They correlate very closely. And I think the biggest thing, though, was investors saw that the Fed may be easing and may be adding some stimulus to the economy.
Right.
And just that signal of switching gears was very positive for these higher mortgage rates we've been seeing.
Mm-hmm.
I feel like it's still too soon to really tell if they'll stick around. Because, there's a good chance they could go right back to where we were a week ago,
Right.
before this all was found out. If there's going to be some more runs, that could affect things.
Yeah, absolutely.
So I just think it's too early to say, but there's some potential there to have rates
would be
potentially
nice.
a little lower. But at the same point, they might go higher again too.
It's a love-hate relationship, I think, with the rates on the agent side. I think it's
Yeah.
want the rates to come down, but also we could use a little bit of the housing prices to come down still, I think, and would still help the market.
Mm-hmm.
But anyways, got a couple questions as far as some questions I've had from clients, common questions, I guess.
Okay.
How long is your pre-approval good for? So this isn't such an incredibly important topic. It is important, but back when the market was so crazy in 2020 and 2021 and stuff like that, where it took a while to get into a property. You were making multiple offers on multiple properties, and there was already 8 other offers, and so you weren't getting in. Exactly. And so you may be house shopping for an extended period of time. So how long is that pre-approval good for?
So I said it. Basically, your credit report is good for 4 months from the date we pull it.
Okay.
And that's something that we would have to repull, and that can greatly affect the qualifying.
Okay.
So if the scores have come down or something like that, new accounts opened, that can throw off your debt-to-income ratio, and maybe you don't qualify for as much now.
Absolutely.
Or the rate would go up potentially, or something like that. So I always said for about 3 months, 3.5, just so that when we have to pull that credit report again, we'd have enough time we'd have to reissue a new pre-approval at that point and reassess things.
Okay. And that that's good. And you're going to be closed before that time, right?
Yes.
Okay.
Yes. So that's why I usually put it about 3 months. Gives us a month to close it.
Absolutely.
On the long end.
Cool. Awesome. How long is an interest rate lock good for?
Interest rate locks, however long you want to lock it. So we actually have anywhere from 15 days all the way up to a year, depending on the program.
Cool.
So, whatever you need. Typical, it's 15 to 60 days, but we have extended locks up to 180 and then 360 for new builds.
Awesome. So really, the interest rate lock really isn't too much of a concern.
There's no free lunches though. So the longer you lock it, the more we're hedged that our company has to take to keep that rate in the moving market. And so there's definitely a premium cost for every
extension.
Yeah, every period of extension.
Absolutely. Okay, last question for you is, what is your market prediction? It's kind of a rough market right now. It's confusing. I've heard from multiple agents, don't know what's going on. They see some properties having multiple offers and going under contract within a week or two, and then you see other properties that sit for months and months, and interest rates are up and down. But just want to hear a little bit from your opinion.
What I'm seeing, I'll state some observations. How about that?
That's perfect.
So, like I was saying, we are very unaffordable. A lot of our counties here in Utah, and so it makes it hard. But the demand for households that need a home is still high compared to what we have supply for. So it's kind of this hard spot where there's this median where rates come down to a certain point, affordability comes down to a certain point, or improves to a certain point. There's going to be people added to the buying pool.
Yeah, absolutely.
And so I feel like we're in a position where, I mean, higher rates are limiting those that are buying. But if we see rates come back down, even 6, especially in the 5s, I think it'll open up quite a lot of pent up demand.
Yeah.
That will enter the buying pool.
And that'll drive costs.
And so, yeah, I mean, you got these houses. I feel like it's going to be in these waves. I just feel where, a house might be sitting, and then rates will adjust, and then all of a sudden, they're all gone overnight, almost.
Yeah.
And because just based on supply and demand and affordability. Now, interest rates, I think there is a case where because last year had a pretty high inflation rate.
Yeah.
And the longer we go in this year, the more that year is going to be behind us every month. And so there's a good chance if we get some lower inflation figures on these monthly reports that they put out, that will bode well for mortgage rates, which will bode well for home buyers.
Yeah.
But I feel like we're still in this demand where I don't foresee any type of huge correction or anything like that because the supply and demand.
Yeah.
It's very different than we were back in 2008.
Yeah,
all the studies that I've read on it. Very different animal that we're dealing with.
Yeah.
And there's a lot of families that still want a house. They would still want the American dream.
Yeah.
Still want that.
Absolutely. Okay.
And need a house, like you're saying. Yes.
Where can viewers get in contact with you? Instagram, social media.
Yeah.
If you can drop your tag or whatever if you want.
Shoot. Yeah. It's I don't even know my Instagram tag.
I can look it up here for you.
You can Google me, Garrett Hansen Academy Mortgage. It'll pull up. You'll be taken to my website. You can look at all my reviews, all the different resources that we have available. Yeah, let me see. And then on Facebook, you can find me there, Garrett Hansen. I also do have a Garrett Hansen Academy Mortgage. If you want to follow me. And then on Instagram, did you find it? Is it Garrett Hansen?
I don't have good enough service in here to
Let me dang see.
really pull it up. It just loads.
Oh, it's Hansen Garrett.
There you go.
Hansen Garrett, 2 R's, 2 T's.
There you go. Okay. Well,
That's
thank
it.
you for coming in today. It was good talking with you again. And
Yeah, thanks for
As
having me.
always.
This is fun.
Yeah.
This was
we'll
good.
see you next time.
All right.